March is, Laura, as we were talking about, on track to be the first winning month for the S&P 500 since November, actually. And if the benchmark index closes out high, it would snap a three-month losing streak. Joining me now is Lee Munson. He's the co-founder and chief investment officer at Portfolio Wealth Advisors. Lee, thank you so much for joining us. You say we're going to be in for a pretty turbulent time to get your defensive portfolio set up. What makes you say that?
Well, think about this, Ashley. We've got profits going up at a slower and slower rate. So the profit growth in American corporations are declining. We're going to go into summer months, which are always a little volatile. But most importantly, think about where we came from the February 11th lows. This market has gone up too fast, too soon. And as you can see with what the Fed comments are, there is no way that we're going to be hiking up interest rates too fast. That, along with what's probably going to be a weakening dollar, and I think you're going to get some volatility. And if you didn't buy on February 11th, I think you might get a chance to get somewhere close to that soon.
All right, so with that said, what do you like? What would you recommend?
Well, the first thing is I love to look at the things that if you get volatility, people always want to go to what they know when markets go down. And so that's the reason why back in '08, McDonald's was the only Dow Jones Industrial Average stock that went up, because the world was ending and people get that they have a 99-cent menu. So If you look at Kroger, that's a great U.S. company. We know what they do. They're supermarkets. And they're going to still have profits with a tailwind because oil prices are still low. And with wage inflation not going anywhere, we don't have worry about people trading up to Whole Foods supermarkets. And then on top of that, you can look at a stock like Unilever, which has got everything. It's got, food, it's got soap, 150% of the dividend payout of the S&P 500. So my retired clients love that. But it's cheap. It's in that value segment. So just remember, if you want to commit money right now, don't simply look for value, which we always love. Don't simply look for dividends, but look for things in the individual stock area that people know and will feel comfortable with. Outside of that, stay on the value spectrum and don't overpay. You've got a lot to lose in all these momentum stocks right now. As we saw with LinkedIn last month, there's going to be bigger tech names. They're going to have big warnings and big drops. So even though Kroger's aren't the cheapest stocks out there, I would say just get the dividends, just get on the defensive consumer staple side, and I think you can go through summertime, have some fun, spend some time at the beach.
Hey, now that's more like it. Your recommendation to me, Lee Munson, go to the beach. I think that's exactly what we'll do. Lee, thank you so much for joining us.